Welcome to the Eforge Podcast, where kingdom entrepreneurs come to scale their business, sharpen their leadership, and forge a life of legacy. I'm Cory Long, business coach, speaker, and founder of the Eforge. Over the last 10 years, I've helped thousands of entrepreneurs launch, grow, and scale businesses that produce freedom, impact, and 7- and 8-figure results without burning out or selling out. Every Thursday, I'll bring you raw insights from the front lines of coaching, solo training, strategy breakdown, and real-time hot seat sessions with purpose-driven leaders just like you. Subscribe now and step into the Forge, where leaders are made and legacies are built. This week, we're going to have a very special guest on. He saved me literally hundreds of thousands of dollars in taxes through professional tax planning. He's also negotiated hundreds of thousands of dollars more in businesses that I bought and sold as my fractional CFO. And he's spoken on stages all over with all kinds of different people. So I'm pretty excited today because not only do we have him here, but we have him here to talk about something today that I'm sure is on a lot of your minds, which is the new tax bill that's getting signed and going into effect. Today we have Ron Fossum with us. Welcome, Ron, to the Eforge Podcast.
Oh, thanks, Cory. Man, it's always fun anytime you and I can get some time together.
Yeah. So I'm excited because today is going to be something that you were just telling me a minute ago. This thing's almost 900 pages, the new Trump tax bill. And I don't even know what to do with that. As an entrepreneur, I don't know what to do with that. As my personal taxes don't know what to do with that. And it sounds like there's even stuff in there that's just placeholders for now. It doesn't even have really specifics just yet. Tell us a little bit about what are you seeing so far? Because I know you've been digging into this. You said you sat through a 3.5-hour webinar the other day on the tax bill. Talk to us a little bit about what this thing is.
Yeah, one of the tax attorneys, super sharp guy. He spent the better part of a couple weeks going through it, and then he was only talking to other tax professionals, and so it was fast paced, and it was still almost 4 hours, not quite 4 hours, and it's a beast of a program. By the time it went through, the Senate and the House and back again, and then to the president, like everyone tacked on all kinds of stuff. It might be helpful to say what this is not. First of all,
yeah,
we're not gonna have time at 877 pages to get into any of the international stuff. Probably not going to talk a lot about green energy type stuff, but most of those are going away. Almost all the green energy stuff is going away. By the end, I think it has to be placed in service by late December this year, and then it's done. Most of this bill doesn't have anything to do with IRAs or 401ks or retirement type accounts. Some of the stuff that did get some big news was tips and overtime. So we'll touch base on those because some of those are undefined, and there's some phase outs that kick in there. What's not discussed or fully defined yet is some of the Medicaid stuff that's been getting all kinds of press. So many people are going to be kicked off Medicaid, and that's going to result in so many people dying and all this stuff. That isn't fully. So just remember, it still has to go through Treasury and get defined, and then land over at the IRS.
So how long will that take, just out of curiosity? Because I know this has been going through the process for a while. Like when would we expect to actually have details on some of this?
Most things get through Treasury fairly quickly, but also most things aren't 877 pages. And think about the size of this tax bill. Was Ronald Reagan did a big one, right? In our lifetime anyway. Ronald Reagan had the biggest one, and then Trump's first one was a monster. Then we had COVID, and then now this one. And so we've had 4 massive shifts. And there's some really new stuff in here that I'm sure is going to be still highly debated in the Treasury. So I would expect another 3 to 6 months.
Yeah.
I'm throwing a dart at a dartboard, but
Yeah, who knows, right? Could be in
yeah,
2025, could be in 2026.
yeah. And so someone just asked me this morning, they're like, "Hey, is this new, tax plan? Is this a 25 bill or is it a 26 bill? Or like, when do I need to pay attention to it?" And I was like, it some of this can go backwards to 24, 23 and 24. Some of it is a lot of it's 25. Go figure. There's several things where they specifically say January 19th, 2025. Because guess what happened January 20th? Like that's so he wanted to reiterate over and over again, hey, I did this for you.
Yeah, yeah.
Uh, so 25, and then there's some of this doesn't even start until 26. And then some things, like it's a little bit misleading, probably for the consumer. There's several things that were in the first one that would sunset, or it was only good for so many years and then it would go away.
Right.
A lot of them are now permanent in the code. It says permanent, which is misleading because whoever gets elected next could
Could change
change
it.
that. So permanent doesn't mean forever, or it can't be changed. It just means that it doesn't sunset any longer. There's a lot of stuff that will phase out. You'll hear me talk about phase out a little bit. Phase out just means your income, the tax benefit starts to go away the further your income goes up, or indexed for inflation, where it used to be a static number and it was always this number. And now they're going, oh, okay, we'll index it to the government inflation, whether it's a CPI or whatever. I don't know if those numbers are ever
Accurate.
really accurate or not accurate. I think the government would go broke very, very quickly if they reflected true inflation in their
Sure.
CPI numbers. They have to give everyone a Social Security raise and that kind of thing. So if I make a comment, I'm not trying to make a political statement or a debate or anything. Like cut me some slack at there. The bill is the bill, and it's what we have to deal with.
So
In general,
yeah, I
I'm
was about
sorry.
to
Go
say,
ahead.
if we were to start and an entrepreneur was just out there right now going, okay, this is going to affect me, where would you start? I mean, it sounds like that's what you were about to say. Like, where do we start? Because this thing's so beefy. And my guess is a lot of entrepreneurs out there don't have a tax planner. They have a tax preparer. You and I've had this conversation a lot. You are a tax planner. You go through the code. You help to figure out strategies and all of that as I go through the year to help me to offset taxes in a moral and legal way. A tax planner is just going to take and they're going to work with what you got, right? So it's two very different people that do that. Most entrepreneurs probably don't even have that. Some of this probably won't even hit a tax preparer's desk until after the fact, way after the fact that it's already done and in law
Yeah.
and gone through Treasury and everything else. Whereas you guys are already planning, looking at this. How can I help my clients? How can I save them money? How can we use new laws, tax codes, whatever? So generally, how would a new entrepreneur start to even go at this thing?
Well, if I started with a 30,000-foot view, first I'd say, as a consumer, we all want the government to spend less.
Sure.
It's fairly simple. Um, and yet, whenever that gets voted on, I want the government to spend less, so long as they're cutting the other guy's funding and not my funding.
Yeah.
And so if we just can't just spend less, then we default to a couple different options. It's either borrow and spend or tax and spend.
Right.
And again, 30,000-foot view, this is more of a borrow and spend type tax bill because it's trying to lower taxes across the board.
So it's affecting all different tax brackets at this point. Because I know you've talked about I know some of the big ones in the media right now are things like tips and no taxes on tips and other things like that that affect down to people making. I was talking to a waitress the other day and she said that she was making like $2 or $3. I don't even know what the minimum now is for a waiter or waitress that works at a restaurant outside of their tips, but it's not much. And so that was kind of interesting. So I know that some of this is going to affect all tax brackets, not just any particular tax bracket or income level.
Yeah, I'll jump in the tip one real quick. That's one that is not abundantly defined. So it does have a phase out. And so if you start making, I want to say it's 150,000 as a single, 250 married,
Yeah. And
it'll
so
phase out.
you're saying these aren't defined completely yet. This has to go through the treasury and then they'll define these numbers or they'll create the parameters around where this is available. Yeah.
Yeah. Where's my cheat sheet?
Yeah, I would imagine too, some of this is going to change even as it goes through those other hands. But it's interesting that that was one of the things that they had done.
It was close. So it starts to phase out at 150 for a single and 300 for a married filing joint.
Okay.
But what's undefined is, hey, I'm a business owner. I'm just going to pay myself tips.
Yeah.
Like,
Oh, yeah. Yeah, I hadn't
they
thought
didn't,
about that. Yeah.
yeah, they didn't say, they said, oh, well, tips are all going to be tax free up to this amount. Well, great.
Tips for who?
Yeah. So, it's, routine and regular and customary, I would think would follow that, but it's the same on overtime, right? Overtime has this very similar $150,000 single, $300,000 married filing joint. It's an above the line deduction. So there's mostly no tax on overtime. So I'm going to tip myself this far. I'm an S corp, so I got to pay myself a little bit of salary, and then the rest of it's going to be overtime. Like that. That's the kind of stuff that just kind of slid through. That they haven't said no, but they haven't thought it through. I don't think in
Yeah.
all the different scenarios.
Definitely some definitions that's going to have to take place down the road to make sure that, like
Yeah,
you just said, the words that you used a minute ago, I've heard you use many, many times when it comes to tax planning, that you have to do it what is customary. And yeah, I've heard you use those terms many, many times to make sure that you're doing what's legal and right and moral. And
so from the 30,000 foot view, next step down, probably 15,000 foot view, is most of the tax brackets went down when Trump passed his first tax bill. And those have all been made permanent. Nothing changed on those.
which that would include things like the Section 179 and some of that where we get 100% again, right? There's a few things that I've kind of heard through the grapevine or seen that's kind of
Yeah.
been interesting because I know those are things that we've used in the past with our tax plan.
Yeah, so 179 and bonus depreciation both are kissing cousins. Bonus depreciation tends to be more of a shotgun blast because if you use it on one asset, you got to use it on all of them. Whereas Section 179 tends to be more of a sniper rifle shot.
Right.
I can pick this asset and depreciate that asset all by itself, versus bonus depreciation, which is all or nothing. And so 179 stayed the same. Bonus depreciation was 100%. And then in the last 2 years dropped 20% a year. And now it's back up to 100, like you just said. And then they redefined research and development as well.
Yeah, you were talking to me about this the other day, even in our own company, because we do research and development. It's
Yeah.
a part of what
So
we
now,
do in our businesses.
yeah. So now it's called research and experimentation. So R&E instead of R&D. So R&D used to be used quite a bit. Same as depreciation. It was all scrunched up into year one if you just documented everything properly. And then it started to amortize and be taken over the lifespan. So it made it less attractive. But now I was looking at an R&E case, gluten-free, sugar-free muffins, because they had to experiment to come up with a recipe that still
Right.
tasted good, still met
Right.
all these health criteria with, no eggs or, someone that's going to make someone sick when they have those allergies. There was another company that did bourbon, and they had to experiment with the way you process bourbon, and that qualifies now. And
Interesting.
so I was like, huh, how did you get that job? I want to experiment with bourbon.
Yeah, that's a whole different ballgame. What's crazy is I mean, you just gave two completely different examples in two totally different industries of what like could be used for that particular tax law. I think that's one of the things I've learned as you and I have worked together over the last, I mean, how many years now? Is you always have this opportunity with a tax planner to get down to the nitty gritty and go, okay, what really would be the strategy that we could use with the tax code that works with your specific business doing your specific thing? Because you and I have already started talking about what are some of the strategies that we could use out of the new tax code that's going to be in effect for multiple businesses that we have, and it would give us the advantage in those different ways that I wouldn't have known about. And you're, I know you probably have been sitting down and reading this thing. And so that's what's crazy is you're digging into the details. I know you're going through workshops right now with other tax professionals, looking at this going, how do we, what do we do with this? How do we take this and shrink it down to where we can use it? And I know at one time you had over 300 something tax strategies just for your tax plans that you do. I would imagine this may even expand that some more. I don't know. Maybe we have 400 after this one. I don't know. It's a lot of pages.
My wife came in this weekend, and she's like, "What are you doing?" Because the TV's on, but I'm looking at my tablet. And I'm like, "Oh, I'm watching, Caitlin Clark, and she's just
Yeah.
killing it. They
Yeah.
won this week." She's like, "No, what are you doing on your tablet?" I'm like, "I'm reading the tax code." She's like, "You are such a geek."
Yeah.
Like,
Well, for guys like me as an entrepreneur, I love it because you love this stuff. You love taking the pieces and the parts and taking and going, okay, how can I apply this to the restaurant you were just talking about? Or how can I apply this to a digital media company or an epoxy business or a service-based business or a doctor or an attorney? It doesn't matter what the business is. There's all kinds of different ways to apply the different things that are they're going to be happening. And like you said, some of it's still going to have. There's going to be some time to get all the details together for whatever's going to happen with some of these that need more detail and more information before we can do anything. What are some of the other big pictures? I know you had some general thoughts across the board with some of the things. I know we've touched on a few of them. Are there other big items that you feel like would be good to mention?
like research and development's a huge one because mentally we just think of guys in white lab
Codes.
coats
Yeah.
in, in a laboratory doing something crazy, making up the next immunization for us or something. But that one is super broad. Like and that's why I gave those examples was
Yeah.
we don't think of a muffin shop being research and development or research and experimental type company. But there's tax breaks. And think about it from the government standpoint. They want Americans to start a business and experiment with some of the revenues that they have to make things better
Better.
so that we
Yeah.
compete on in an international scale. And this is how, anytime the government is trying to get the populace to do something, they almost always, rather than write the check, they'd almost always prefer to throw a tax break that way to drive activities that way.
Yeah.
So another one, QBI or Section 179 or 199, qualified business income. Generally speaking, that's covered under Section 162, which is normal business. But what do you want to be qualified as a trade or a business, or do you want to be qualified as just a what they call a mere investment?
Mm.
And it used to be we wanted to be the investment to get out of Social Security tax. Well, the Trump first version and now this one that is now permanent, it's better to be, in most cases, not all, but in most cases, that'll get you in trouble with the tax code. You say
Yeah.
all or never,
Yeah.
always, those will get you in trouble. But if we can call ourselves a trade or business, now all of a sudden it qualifies under the QBI, which is a 20% deduction, which is frequently better than, if we're running a successful business, that 20% is better than our standard deduction on the personal return. Now we can write off education, training, seminars, travel, meals, interest expense if we borrowed money or used credit cards or loans or lines. And none of that has anything to do with the amount of hours that drive that.
Mm.
So I could passively own a company, and even though my level of activity is pretty minimal, I can still qualify as a trade or business, write all of that stuff off, and that's better than just eliminating Social Security tax.
Right.
But until you do the math both ways, you're never going to know. And more often than not, especially if you're dealing with a tax preparer who's just trying to pound out,
Yeah.
500 returns in tax season, he's not running it both ways. And by then it's already too late anyway. The calendar year was already come and gone. So the QBI, I think, is one that's going to fly under the radar for a lot of tax preparers and CPAs and EAs, just going to get missed as an opportunity because they're still thinking this active ordinary income versus passive, and that's not how it's defined.
So if you thinking back, I know you and I have had this conversation quite a few times. I think you said before that just even on normal tax code, there's 4 different ways that you can take the home office exemption.
Yep.
And most people know really just one. And it's this kind of stuff that sets apart someone that's really truly a tax planner, somebody that's taking the time to go, hey, let's run all these scenarios and see which one is best for you and your specific situation doing your specific thing. But I didn't know there was more than one until you and I talked about it years ago. And then we started looking at it. What's the best way to do that? And how should we do that? And there's these little nuances that can save sometimes tens of thousands of dollars in taxes. It's kind of crazy, which is huge for a business owner. I mean, that's money I can't make back in other places.
Yeah. And that QBI was one that was set to phase out, not because of income, but it was going to expire. Sunset app. Sorry, I should have said sunset, not phase out. But that's one that's now permanent.
Wow.
And so that 20% business deduction is huge.
Yeah.
Probably one of the closest things I saw to a campaign promise, I guess, was Trump talked a lot about, no tax on Social Security and that kind of thing. And so he didn't exactly give us an option for that, but he did give us a brand new senior deduction that does have a phase out. But if you're 65 years or older and you're on Social Security, if you're single, it phases out when your modified adjusted gross income exceeds 75,000 or 250. It starts to phase out at 150. It's completely gone at 250 unmarried, 75, and it's completely gone by 175 for the single. But it gave them an extra $6,000 per person as a deduction.
Wow.
And so it's designed to kind of help fulfill that promise, even though it's not directly attached to it.
Sure.
I think that's his version of trying to fulfill that campaign promise.
Yeah.
Which, I mean, seniors that are only making, less than 100 grand a year, like, yeah, they need a break
Yeah,
for sure.
$500 extra in my pocket every month's a lot of extra money.
And that's per person, right? So yeah, if they're a husband and wife,
Yeah. Yeah,
extra
it's a lot of
thousand
extra
bucks.
money.
One that doesn't make, I couldn't figure out how to apply this one. It's such a, I shouldn't say that. It's just a super, super narrow niche. Is there's a car interest deduction now, and it has to be an American made car. Your interest expense has to be over $10,000. I'm sorry, not over, but up to. The car has to be brand new, not new to you, but new, assembled in America. It doesn't apply to ATVs, trailers, campers, anything else. But it also phases out for an individual at $100,000. So what person who's making $100,000 is buying such an expensive American-made car that he's going to have $10,000 in interest?
That's an expensive auto loan
Yeah, and it's an up
or an
to
expensive
10.
car, one or the other.
Yeah, and all American, right?
Yeah.
Uh, if it does apply to you, you can refinance it up to that amount and then take it. So that's one that can go backwards. But of all of them, I'm like, oh well, this fits this person and this fits
Yeah.
this couple, and like you can see who they're trying to help. This one, I get that they're trying to do American cars, but I don't know of very many people at 100 grand spending $10,000 on interest, which means their car payment is what, 30 grand?
Yeah, that's a lot.
That one didn't
Yeah.
make sense to me at all.
Yeah, that one doesn't make any sense. I think that's the crazy part. I know as you and I have sat and talked about the uh, tax strategies, this new tax plan, even there's so much that, like you said, some of it is super narrow. It's like for just a very select group of people or businesses or markets or I don't know, whatever it is. And then there's some that's kind of more wide range, like you were talking about earlier, like the Section 179 or the whatever. Those are a little bit wider range for the small business owner that's starting their business and they're just getting going, or the small business owner that's been going for years. Do you see this affecting them a lot if they're not at a high income? Like if they're like we've talked about before, most businesses never break $1 million a year. What is it, 4%, 5%, whatever it is that break
Yeah.
$1 million a year, and the rest of them don't? So that means the income of that business owner many times never gets above, I don't know, quarter of a mil, 300,000, something like that a year. Are they going to see a lot of benefits out of what you're seeing in the new tax code, or could
If
they see a lot of benefits?
if they pay attention, so let me give you a real example. So IRS code 1202, which is also sometimes called a QSBS, or a qualified small business stock. So you have to be a C corp in order for this to qualify. And this was on the books before, but got updated. So you had to hold your business for 5 years. So long as you sold it for 10 million or 10 times the amount of money that you've invested in the business, that 10 million was tax free.
Oh my.
Now that's gone to 15 million, and it's prorated at 50% and 75% if you hold 3 or 4 years. So even if you don't make the fifth year, think about that. If I'm a dental office and I say I've got three practices. I sell one of the practices, and I take that money and I go do another practice. And I just cycle through my three practices every 5 years. At 15 grand, 15 grand, 15 grand, there's 45 million grand. I'm sorry.
15 million.
Yeah, 15 million. It's $45 million of tax-free money. You don't need to do the home office. You don't need to do the car. You
Right.
don't need, like, they also left that as a big backdoor inside opportunity zones, qualified opportunity zones.
Oh, yeah, yeah, yeah.
So almost most of the qualified opportunity zones are real estate related, but you can put a business inside the qualified opportunity zone. And there's all kinds of qualifications and hoops, just like this 1202 change. That's phenomenal. Like you start talking about generational wealth when you're going to 50 million to $100 million, and you're just smart about how you start and grow your business.
Yeah. 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 Because now you've got an opportunity, like you just said. I mean, even for my mind's just swirling because I'm selling a couple of businesses right now. One of those would
Yeah.
almost meet, well, it would meet the 3 years. And I'm thinking about even if it's 10 times what I invested in it, I would easily meet that qualification, what we're going to sell it for. And so there's just some things like that. It's pretty interesting. That's pretty interesting.
So I think there's something in here for everybody for sure. Even down to 1099s,
Yeah.
everyone in America who did 1099, you pay someone $600, you got to get the W-9, send them the 1099, anytime you pay them more than $600. That got changed to $2,000.
That's a big bump.
And that doesn't mean if you only earned $1,000, you didn't get a 1099 that you don't have to disclose that income. You still need to pay tax on all your income, whether you
Right.
get the 1099 or not.
Right.
But from a business owner standpoint, sending out 1099s can be super cumbersome. Remember, was it Cash App, Apple Pay, Venmo,
Yep.
Google Pay, all those guys had the same rule. And so they took them to $20,000 and not and 200 transactions.
Golly.
And so you want to talk about an administrative burden being lifted.
Yeah.
That's huge.
Yeah. Yeah. We've outsourced our 1099s because we didn't want to mess with we have somebody that does that for us. And it's for that very reason. It's just burdensome. It's just a tedious task. I can't imagine doing it. I mean, that's going to eliminate so many of those 1099s that had to been sent out, the paper, the time, the administrative tasks. I know you and I have talked about it before. I mean, there's companies out there that send out paper checks still and that sort of thing that by the time
Yeah.
they go through all of their fees and all of the other stuff, it costs them to send the money. It's just fascinating to me. Sometimes how some of these companies are ran and what they do.
So you were asking about, is there something for someone just starting out? Love them or hate them, whatever band you're on, Trump is a marketer through and through. And so he's come up with a Trump account. And the Trump account is kind of this weird Frankenstein convoluted thing between a traditional retirement account and a Roth retirement account. We can't do this until, and I don't know why they chose this date, but July 4th, 2026.
Okay.
It's the soonest we can do it. And then
It's
the
a
parent
freedom
has to
date.
open this for the kid. This is only for kids that are under age 18 and the kids are a US citizen. The government will seed that account for the kids that are born between 23 and 28. So there's a 5-year window where the government's going to give every kid born in that 5-year window $1,000. The parents can give up to $5,000 per year, parents, relatives, and nonprofits. And you're like, okay, this doesn't really match anything that's on the books anywhere.
No.
Employers can contribute $2,500 per year, can't self-direct it, and you have to invest in American-based mutual funds.
Okay.
Okay. So I can't self-direct it. I can't go invest in real estate or tax liens or gold or crypto or whatever. It's going to have completely tax-free growth. So that all makes sense. Like they've got all these rules bullet pointed, and then it just says no limit. The $5,000 limit doesn't apply to a nonprofit. So you get 2,500 for the employers and 5,000 from the parents and 1,000 from the government. But if you're a nonprofit, you can give this kid as much as you want. Like, there's nothing that says yes or no. It's that's why I say this is a weird deal. Like the whole bill feels like it's got these nuances in there of, well, what about this scenario? What about that scenario? So once the kid's 18, they can pull out half the money. Once they're 25, they can pull out 100% of the money. Age 30, they can pull it out for any purpose whatsoever.
Oh, wow. All tax-free growth.
Yeah. And the qualified uses for under age 30 are higher education, post-secondary credentialing, so trade schools, small business or farm expenses.
Oh, interesting.
So he wants to have the next generation of farmers, disability, domestic dispute, abuse, natural disasters, and up to 10K for a new home purchase or 5,000 for a new baby. So you got, it feels like you got, I think I'm going to date myself here, but you got babies having babies, and the government's going to help sponsor that.
That's wild.
But that's the Trump account.
So you feel like surely they're going to come back and they're going to put a limit on the nonprofits. Surely that's not going to be left like an open door, like you and I were talking about before. That doesn't make any sense. But maybe they do. I don't know. But
unless it's there for the super wealthy to try to circumvent the estate tax, because there was some changes on the estate tax. Like very few people ever pay the estate tax because there's so many ways around it.
Sure.
This is either that or it just got missed. Like, come on, there's a lot of smart people in Washington. There's a lot of dumb ones too, but
a little bit of both.
I find it hard to believe that this just slipped through the cracks.
Yeah.
But when there are so many of these that slip through the cracks, granted, they were up at 1 a.m. trying to write this thing, so maybe that's how.
Yeah, I can't imagine writing almost a 900-page bill. It just doesn't even compute for me. You know me in detail. I'm not a super detailed guy anyway. That would not be me.
Yeah. And there's so much more. Like we could go for hours. There's imports. There's a de minimis rule on imports. And so if you're running an Airbnb business, there's people that are still getting audited for their ERTC COVID money. A lot of those refunds got suspended. And if they do get any money, it's guaranteed to be audited how it's used. Some of the penalties, I saw a court case. I was looking at that 1099 rule. It was the epitome of the American dream. Someone came, I want to say he was Hungarian, started a roofing business, employed a whole bunch of foreigners, and they gave him, he was legal.
Right.
Some of the people he hired wasn't legal.
Oh, wow.
And they gave him false information. He paid them on a 1099, and you're like, oh, well, a 1099 fee is, the fine for not doing the 1099 is only $300. In this guy's case, he went to court, and the IRS went after him for all back payroll. So $300 per 1099, hundreds of people.
Wow.
And it just destroyed the business.
Yeah. Yeah, there's no way. Not at that point.
Yeah. There's some pretty stiff penalties on the back of some of these things. It's like we better apply it right, or it could be devastating.
So I'm curious for anybody that's listening, because we have a little bit of every, like a hodgepodge. We have a little bit of everybody that listens to the podcast. people that are just starting, people that have been in business a long time, maybe people that are kind of at the end of their business, maybe they're selling it off, they're looking for tax advantages, that kind of thing. What advice, because we're looking at this going, and you've barely even, I mean, you and I talked about this, we barely scraped what is in this thing, just a few things out of it. When should somebody bring on a tax planner? Like when would you advise somebody, hey, you know what? Honestly, you probably need to talk to a tax planner instead of doing what you've been doing with your taxes and trying to figure it out. And especially with all the new bill and all the new strategies and all the things that are coming. I mean, it just seems like to me that people are going to need some help with this stuff. When should I do that? I know you and I met years ago and you and I talked and you're like, why don't you have a tax planner? And I'm like, what's a tax planner? I didn't know. I never ran a business. So I talk to the person out there that maybe even like my dad, he had been in business for decades. He'd only ever had really a tax preparer and a CPA. That was the two roles that he had had in the business. He never had a tax planner.
Yeah, Iris loves those kinds of people because
Yeah, I mean, dad, who knows how much he overpaid in taxes for decades. Just
yeah,
didn't know.
we've got something called our Fast 15. If you're a brand new business and just coming out of the gate and you've just made your first $100 or whatever, you could call our office and just get the Fast 15, and that's super simple stuff. And that should be able to get you to, 50-ish in revenue. So that you're not paying tax on the 50, but you're still sucking the money out of the business. We have another starter kit that takes you up to about 100. And at 100, you should be able to, in most industries, we're getting people really close to zero in taxes at 100,000. And those are kind of more templated. Like here's what you need at this revenue level.
Right.
When you're north of 100 to 10 million, our process is normally we send you a portal link, put in your tax return, we charge $1,500 for an analysis, and we literally do a red light, green light, yellow light type analysis that says this looks great. This one's, you better make sure you have the documentation done right, and this one is so far out of bounds, or this number doesn't match that number.
Right.
And then from that analysis, if they want to move forward with the plan, they can just take the analysis and go back to their own
Run with
CPA.
it.
Totally fine. If they want us to do it, we'll apply that $1,500 of the analysis to their tax plan. Zero is not the right number for everybody, but
sure.
You have major corporations like Levi's and Chevron and GE and whatever paying zero in taxes. We know there's a legal, moral, ethical way to do this. It's just finding the strategies that are right for you.
Yeah.
Which is why you and I spent so much time talking initially in the beginning. But if you just go to our website, taxplanwealth.com, go to the contact us page and mention Eforge, and we'll give you $500 off the analysis side, just to know where you're at.
Yeah. That's a smoking deal.
Very few people understand where they're really at. They're like, oh, I've had my guy for 10 years or whatever.
Right.
It's all about a relationship, or it's the biggest firm in town, or my dad used them, or whatever. I feel like I've heard all the stories, but at the end of the day, if the goal is how to legally, morally, ethically reduce your tax bill, then we don't think twice about getting a second opinion for our health. Like, let's get a second opinion on your taxes.
Right.
Excuse me.
Well, when you and I very first met, one of the reasons that I wanted to talk to you is we had just paid a $90,000 plus tax bill. I had never made $90,000 in my life, much less paid a tax bill that big. And I was like, something isn't right. We had gone through, I think when you and I had met, we had gone through at least 3 CPA firms at that point that all said, oh yeah, we can do this and we're tax planners, blah, blah, blah. And I hired the biggest CPA firm in town, and I hired the one that sold me the best hey, we can do this kind of thing. And at that point, I was sitting there thinking, there's got to be a better strategy to do this. This makes absolutely no sense. I know there's got to be somebody out there that understands this better than me. And then you and I talked, and you were like, "Oh yeah, here's how it works. Here's what we do. I paid you for a tax plan. We've never paid anywhere near that through all these years, and have made a lot more money than we made back then." And so it's fascinating to me because I think you just don't know what you don't know. And as you and I have talked through the years, there's been so many things that I've learned, whether it's simple things like the Augusta rule and Section 179 and the office and all the other little strategies that you've taught us through the years, to the bigger things like you and I were talking about some strategies for this year the other day that involve capital investments where we could take a big chunk out right off the bat, and it would give some back end income to us on a monthly basis. It's just those strategies that I think people just don't realize. So if you're listening to this, watching this, make sure and go to Tax Plan Wealth, fill out their form, make sure and mention Eforge for $500 off. And that'll get you that initial analysis for you to be able to see where you're at. Like he said, I just didn't know. I didn't know what I didn't know. And it taught me something that it's worth finding somebody that knows and paying them, because you save so much more money on the back end if you're making the income in your business. So, hey, Ron, thank you so much for being with us today. I know we spent a lot of time and we barely even touched this whole tax bill. It sounds like it's still going to have 6 months or more worth of who knows what finagling to get it where it needs to be and what's going to happen. Anything that you want to leave the listeners with today that you're like, look, if you did this one thing with your taxes as a business owner, this is some advice I would give just out of curiosity.
I would have your accountant, CPA, EA, enrolled agent, someone run an analysis on your entity.
Oh,
Like make sure you're even in the right entity.
yeah.
And unless they can show you the math, hey, this is me as a sole prop, this is me as an S corp, this is me as a C corp, because they're all treated differently.
Right.
And it's not like you can flip from year to year. And this year I want to be an S corp, and next year I want to be a C corp, next year I want to be a sole prop. But understand where you're at. Are you even in the right entity? And when should you be the next one? Like it should be a revenue number, because everything in the code is all based around revenue.
Right.
So get that analysis from us or from somebody.
Yeah, I think that was something that you opened my eyes to a lot of things. The fact that you, even with the entities that you have, if you set up a corporation, we've got to distribute and give out the tax certs or the certs for the actual entity itself. There's just shares. There's all kinds of things that you just have to do that I didn't realize until we started this. So hopefully somebody will take advantage of the opportunity here to learn more about their entities, where they need to be, what they need to be doing, make sure that they're actually set up correctly with the taxes. Ron, thanks again for being here today and breaking all this down. I know that every entrepreneur listening hopefully got something out of this. I know I did, and hopefully they're going to save themselves a ton of money as this tax law goes into effect. Hey guys, if you've enjoyed today's episode, make sure that you hit the subscribe button to the Eforge Podcast. Leave a quick review. We would love the reviews from you. Help us reach more kingdom-minded leaders like you. If you want to go deeper or see where we're building behind the scenes, follow me on social media at The Real Cory Long. It's at The Real Cory Long. You can find me on Instagram. You can find me on YouTube. You can find me just about anywhere at that. New episodes drop every Thursday, so I'll see you next week right here in the Forge, where leaders are made and legacies are built.